Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me is Lisa Rowan, personal finance expert with Forbes Advisor, to discuss 4 tips for strengthening your finances before a recession hits. Lisa, it is great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill.
Before we get into the 4 tips, explain what a recession actually is.
A recession takes place when there's a significant decline in economic activity, and it has to last for at least a few months. So that economic activity, it's measured in a few different ways. You have employment, industrial production, consumer spending. And if these metrics all start to match up to indicate that the economy is getting smaller rather than growing, it's possible a recession could eventually be determined.
Is a recession really likely?
We're not looking at strong chances of a recession right now for 2 reasons. First, employment is really strong. We have the unemployment rate back in line with pre-pandemic levels, and our economic output, our gross domestic product, is still really strong. But a sudden shock to the economy can also kick off a recession like it did at the start of the pandemic in early 2020. So the inflation we're seeing, along with the Russia-Ukraine war, we have a couple of factors here that could potentially provide economic shocks. But I will stress that, again, for now, we are still in solid shape. We're just looking ahead and being prepared.
Now for the 4 tips, starting with building an emergency fund. How does one do that?
The key is to build a habit of saving, no matter how modest the amount is that you're actually able to save. So anytime that you can rely on your own cash when unexpected costs arise, rather than relying on debt like credit cards, that strengthens your financial resiliency if you face an economic shock that's either on a personal level or on a more widespread level.
And let's talk about that, paying down debt. It can be a very daunting task when you face it.
Yeah, but you want to get rid of it. And especially right now, we're entering a period where it's going to be more expensive to have debt. So as interest rates begin to go up this year, you'll probably find the interest rate on your credit card starts to go up too. So if you carry a revolving balance, the extra percentage point or 2 can really add up on your monthly bill. So like I said, you want to get rid of it. And by eliminating debt when you're on solid financial footing, you'll have one less very expensive thing to worry about in the event of a downturn if you have to shore up things a little bit.
And your 3rd tip, which I think is the most key out of the 4, you recommend looking at your overall lifestyle.
Yeah, our lifestyles have changed a whole lot during the pandemic. And so it's a good time to take a look at your spending and simply think about your priorities and your values. So keep anything that's truly important to you, like maybe a fitness membership or a hobby you've picked up. But if you're paying for services or items that don't really serve you anymore, reduce them now while it's easy to do so. Put that money towards your emergency savings or paying down that debt and just create a little bit of a cushion for yourself.
And finally, the 4th tip includes a career assessment.
It is always a good idea to be thinking about your career. So update your resume regularly, keep learning new skills, and advocate for a raise now while it's a hot job market. So even if you're happy with your current job, it's always to your benefit to be thinking about how you provide value to employers and how you can maintain that value, even in the event of an economic downturn where the job market might contract.
All right, Lisa, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.